Hey everybody, happy weekend and welcome back. It is Wes with Pikes Peak Trades and excited to give you another weekend video update. And what a week it was for the Bulls, and certainly a very disappointing one for the Bears. I've been saying for quite a while on my FinTwit feed, the Bears are still outnumbering the Bulls. I would estimate 3 or 4 to 1. And in the face of a wall of worry and a lot of negative sentiment, stocks just continue to climb. And that has been my primary call for weeks. And if you've been following me, I've certainly kept you out of a lot of trouble by trying to keep you away from early shorting. We had a few very smart tactical shorts this week. Bears had a chance to end this week on a down note after Thursday's intraday pullback, and they failed. They dropped the ball. We're going to be looking at lots of evidence that continues to just build and mount, and suggesting that we really need to continue to embrace what I've been calling for a while is a primary to bottom. So let's jump right in, start looking at all the evidence, take a look at a few individual names, some commodities and crypto. So we're again at the monthly chart, and you can see on the month strongly now above all of the EMAs. 4211 is currently the 8-month EMA, and we're pushing up towards a bearish 0.618 fib. Now, there has been a lot of misinformation out there about the level of retrace in an ongoing bear market. It is not unheard of to have a bear market rally that approaches the 0.618 May of 2008. Go back and look at that one. That one definitely retraced to the 0.618. So getting into this level doesn't invalidate the bearish red. But when you start to see these monthly EMAs hooking up, if we secure that with the close in August, we're only halfway through, we got a long ways to go, with the close above, and we do it across the board in big tech and in growth and in small caps, then we've got an even stronger set of evidence that we're much more likely within the first intermediate leg up of a primary 3 bull. And that has been for weeks again my primary call, and will continue to be as this evidence grows. Looking into the weekly SPX, and I talked about this for the last 2 weeks, that my target above this 30 or this 21 week EMA. So when that triggered above 4,100, my next target up was the joining of this 2.0 fib along with here the weekly 50 SMA. And when I show you daily, you're going to see that also is going to look at some potential resistance on the daily. And that's exactly what I think we're staring up at after this very nice weekly candle up well over 3% here on the SPX. So get you into that daily. Let me skip back to it here. And you're going to see another piece of resistance right there is that 200-day SMA. So I think we've got kind of a joining of targets that should top this minor 3. I do need to point out in fairness that everything needed is in place for a minor 3 top. I really don't see how you can argue that the leg up from July 14th is not a clear 5 waves up. 1, 2, 3, 4, and now 5 into what I have as the third leg. Now, of course, the bears are not going to put up much of an argument there because they want that to be the C leg. So an A, B, C up of that leg. And I would just point out that it is already above the 1.618 extension. Let me just add that on to you for visual reference. There's no rule that says a leg C of a corrective move can't be more than the 1.618, but I just want to point out that it again lowers the probability of that, and the evidence stacks more favorably here that this is not a leg C of a bearish X wave, but instead it is actually a minor 3 of a fresh 5 wave impulse. Now, as that my primary count, we could pull back at any time into a typical fib. I'll show you those fibs on SPY and also the small time frame charts. But again, I really love that confluence of evidence right there, 43.30 to 43.50 as a target for next week. So getting into that small time frame chart, here on the SPX. And what you're going to see is what I have it in as Thursday's pullback, a clear 3-wave moves. Bears had a chance to make this 1, 2, 3, 4, 5, put in a weak bounce and then sell it off, and they absolutely did not. We gapped up on Friday, we pulled back a little bit, and then it just marched all the way up right through the close, closing on the highs, and that is not a bearish pattern at all. When bulls are in control on the last day of the week, putting in this kind of move, I think we're in the middle of a 3, of 5, of minor 3, and I'm looking for that continuation. Now, I do want to talk about SPY because those of you that are good at Elliott Wave would notice that within my wave count, that minute 3 is actually shorter than minute 1. And we know within any impulse, no matter what degree it is, leg 3 cannot be the shortest. So you take the length of leg 3, put it onto the end of wave 4, which I do think finished here this week, finished on Tuesday. And we have a limit that SPY in this count cannot exceed 435.95. If it does, for the bulls, that's a great thing. It just means my internals are wrong, and it likely means that we haven't yet topped minute 3, which means that minor 3 is going to look upwards into some kind of fib extension, like maybe I have to put that one on, the 2.618, which would then move up and challenge the March highs. Now, speaking of March and April highs, there's another piece of evidence I want to show that I think is significant, and that is in the NYAD cumulative. So this is the cumulative running total of advancing issues minus declining issues on the New York Stock Exchange. So this is a broad market indicator of breadth. This is a breadth indicator, and you're going to notice that this week's close is nearly at the same level of cumulative advancers as the late March highs, where the most recent bigger market peak happened. It closed well above those April highs. Okay, so this, in my use of this indicator, which I think is the correct one, is that breadth is leading out. We are seeing a broad market rally in participation. And when you certainly look across the board at financials, at industrials, they are in very similar counts to what I just showed on SPX. We are seeing a broad market rally. This is not a narrow, bearish rally where only a few of the big names are going. We're seeing it broad, and this NYSE, NYAD is your indicator. Now, comparing that to where were we in April? So June we've surpassed. We've just moved right there into the late April, early May highs. We haven't surpassed it yet. So that's why I'm saying that NYAD as a leading indicator, I think we're just begging for higher prices to hit. And another thing here on the SPY, we have nearly a year's long, this is not quite a year, a little bit less than that, a volume POC going back into late 2021. I included that measure of time because that's where we set in that time period the all-time high. So I'm looking for continuation right into that minor 3 fib. Then we can pull back and cool off a lot like we did here late June into early July, and then we're looking for that 5th and final wave up. And if we seal that pattern, the bear count will come off the charts. The X wave in theory can extend all the way up towards where this big 3-wave move had its start and its end. And so I won't be removing that until we see that clear 5 waves up. But as I've been sharing over the last few weeks and including the end of this week, the evidence is not in favor of the bearish count. So into the small time frames on SPY, I have included here the possibility that this minor 3 in between the 1.618 and the 2.0 fib is topped. That is my only short-term bearish alternate here. And those bears this week that thought they were going to get a big sell-off on CPI didn't happen. Thought they're going to get the big sell-off on PPI. It didn't happen on the open. They got an intraday reversal, got them all excited about the end of the week. The money has not been made on the short side. Now, we did tactically short right here on Thursday. We caught this lower high, and that was our best short play of the week. But everything else from there, whether it was Square, whether it was Tesla, whether it's SPY calls, IWM calls, we're hitting it from the long side at PPT. We're on the right side of the trend. If you're consistently looking for the bear bias, you need to recheck your own bias. It is simply not paid off for you. So let's continue marching through other examples of evidence. And we want the QQQ monthly because, like SPX, we have a significant close above its final MA resistance. Now, the month hasn't closed yet. We're halfway there. This is on the right track. When this is closing above, this can be a springboard for further movement. And if we look into the weekly, it's the same setup. We're looking for continuation. We've now peaked above this weekly volume POC, which goes all the way back to the COVID correction. And I think, again, we are targeting that 50-week SMA. I'm looking for the upper 340s on the Qs, and I think it could definitely happen next week. So into some of the details of that daily count, and here we are. We are in minor 3. One thing I didn't point out that I wanted to on SPY, SPX is a close above the upper BB. So a rocket shot day that would close above the upper BB into this weekly and daily resistance area, that would be a confluent set of exhaustion movement that I would be looking for to try to set this minor 3 top. But again, you're going to see same pattern, 1 running flat, 2, 1, 2, 3, 4, and now we're in those stages of minor 3. Looking into the short term, where could we go in the short term? And I have this week as a 1, 2. So we got that low Tuesday right here. We're in that 1, 2 up, and I'm looking for a move within this 3 of 5 of minor 3. I can move this 3 now as we closed on a new weekly high and can update those fibs. So those fibs would be roughly in that area. Change that real quickly for you in real time. It's just a matter of pennies, but always good to be precise when you have the option. And so this is what we're looking for if we do get a immediate bearish resolution in the short term on Monday. So getting into small caps, and small caps, I've almost already reached the 2.27 fib here on IWM into the daily. Look at that close above the 200-day SMA. That's what rejected it Thursday. Now that was a worrisome candle. You can't put all of your eggs into a 1 candle basket here. And those that loaded up short got roasted today, Friday, anticipating that it would follow through. This is only a potential shooting star until it follows through red. Obviously, it's not. So has minor 3 topped? It's absolutely possible that it has. In that case, we'd be looking for a retest of about 190 to reconnect here with the 8-day EMA. But everything here still says we could just extend higher. We get into growth stocks. Now, this was the one that really had me worried because the way that it's been a little bit choppy internally with these internals, a violation of price at 49.34 would have invalidated this more nested bullish count and forced it into a leading diagonal 1-2. Now, I thought by the end of the day Thursday that bears had an even fighting coin flip chance, and it simply didn't happen. We saved that 4 above that 1. We've now moved off of it. Okay, now, because of how close that invalidation is, if we're going to see weakness that results in those minor 4 counts on the main indices, we're going to see a growth stock dump. And so you have to say there is still some probability here that we get weakness next week because of this potential A, B into a bearish fib zone, and then a move down that could potentially last all of next week if this is in fact a minor 2. So we can't rule out immediate bearish scenarios. We always have a plan, and that's the beauty of Elliott Wave, is this gives us an invalidation level, Below that, the probability then suggests that this white count will not continue and extend, and then we've got to shift gears, and maybe we're looking for a multi-day pullback. That's one of the things I just love about Elliott Wave. Want to show you financials, and this will be the last of the main ETFs that I follow that I'll show you. And financials are so key. And I think this week we just got continued resolution into this minute 3 zone. Not every ETF is going to track the same. They are certainly unique. XLF bottomed later than everything else. And so for it to be behind a wave in its degree count is not surprising. It's right within that typical fib zone. So we could pull back within the 4, and that would look to pull back into the midweek lows, certainly possible. But again, the wave 3s, whether it's minor or a minute, can always extend. And right now, even though the small time frames are overbought, we can stay overbought for a long time within that fib zone. Okay, let's get into some individual stocks. We certainly want to talk about the big name tickers and also some growth stocks. And so we look at Apple. And on Apple, you're starting to see weekly EMA crosses. That has not happened yet on the main indices, but when you're getting the 8, crossing the 34, then crossing the 21, and now it is confirmed a close across the 50, we are starting to see the big boys lead out and confirm that this is not a bearish bounce. We are not far at all from taking out those March, April highs, which is where the NYAD is trying to lead us. So within Apple, I still have it within a minor 3, and it can just keep going. We're also certainly aware of how overbought this is on the daily RSI. It's nearly 80. So that's why we are certainly aware of the potential of that minor 4 at any time. But until we get the correct structure and setup, we're not going to guess short, certainly not into this close. We look at the small time frame. Actually, let's just keep working through the dailies here and we get to Amazon. And Amazon is an interesting one. So Amazon did not set a new swing high, and I've been talking about this more in our Discord updates, that this is potentially still an ongoing wave 4. So we're definitely watching Amazon closely because we could get that weakness early in the week that's going to pull it back to a more typical zone. But the continuation count says that this is just a drawn out 4, and we're going to be looking up into the 150 area for Amazon. Okay, one that I turned my group's attention to late at the end of this week is Meta. And Meta puts in an inside candle today. So it wasn't as enthusiastic in its up movement as others in big tech. And my wonder, is it just they're trying to coil for continuation? So on its earnings dump, it did bottom, a double bottom move. So it's well behind the others. We are starting to see some daily EMA crossing. So it's still possible that we get a big recovery move. I was debating on, do I buy that candle into the weekend? My general practice is I don't like opening up new positions on a Friday. I decided I wanted to wait. Even if we get a gap up, I think we're going to see the weekly high as a little bit of resistance. There is a ton of room to run if this count is correct. The blue fib is here in case this needs to be an A, B, C down to catch a more typical wave 2. So let's keep working through some of the other big boys, and we get to Microsoft. Absolutely no bearish sign. That is a hammer candle on the weekly, and it's approaching 2 points of resistance here. The 50-week SMA at 295 and also the upper BB into the daily. Has Microsoft finished minor 3? I have it like Apple in saying that no, it has not. That minor 3 is going to continue to extend. There's that 200-day SMA, which also coincides neatly with the 50-week. There's your target for minor 3 on Microsoft. And of course, we want to look at Tesla. So Tesla, with the hammer recovery, it's back above all of its weekly EMAs or SMAs, up really nicely on the day. Had some members in my group that just nailed some lotto calls. And with an outside bullish candle Tesla is one, like Amazon, that hasn't set a new swing high for the month. So this is one to watch. If it can clear about 910, that could be the trigger to run right up to that upper BB and the 970 fib marker for this week. And that's going to correspond with that run in SPX towards 43.30, 43.50, and that run in QQQ into the 340s. Okay, there's your big tech group. Now, is growth setting up? Because you saw that ARKK chart and you saw that I have it still in a bullish continuation pattern. Do we have names ready? And I say we do. Take a look at something like Square. This was another that I really was tempted to enter. Again, I just don't like those Friday positions, but an entry that is above today's morning low, even a gap up with a slight pullback to play this 3 within minor 3, I think for Square. It's got this significant pivot at 93. It's bumped up against 3 times. That's the breakout level to trigger something strongly into the 100s. We get to Shop. Shop was not so enthusiastic today, so I don't have as much enthusiasm for playing this one as I would something like Zoom. So Zoom in a nested 1-2, and we had some members pull the trigger here on the higher low. I'm waiting for Zoom to get above about 111. I want to see this 50 period, 15-minute SMA hold, which corresponds in this case to about a day and a half, 2-day moving average. So this is a good trend follower. We stay below it, I lean bearish in probability. We move above it, that's when I want to get long to try to catch that 3 of 3. A new one to the list is Snow. And for Snowflake, want to point out that there are a number of growth names that I can't guarantee that a cycle low, Roku's another one, is going to lead to a new all-time high. Because you remember that Snow actually double topped back in November. Snow's all-time high was actually on the spike high in late 2020. So I just leave it here as a possibility just to show you that there will be some names that recover and come out of growth that do move on to set new all-time highs. And this is one from a technical perspective that I think looks good. I think a clear 5 waves up, 1, 2, 3, 4, 5, a clear 3 waves down to 2. That is what you want to see off a significant low, and now another 1, 2, 3, 4, 5 up. Is it ready to pull back on the small time frame? And that's what this fib suggests. So I could certainly see the ABC move down here, and that would correspond with a lot of short-term bearish counts that I did show. It is possible in a very bullish setup that a wave 2, this in this case would be, here I have this as, yes, that this would be a minor 2 of intermediate 3. It's possible that wave 2 is already in. So add Snow to your radar as it's a new addition for me this week. Okay, just really quickly, that's all that I have there for you in the main indices and growth. And definitely want to talk about commodities, give you a little bit of where I'm looking for GLD GDX. And I've been mentioning this for a while about GLD GDX. Let me actually start with GLD. That just consider this nested 1-2 count. And we got twin pullbacks to 0.618 fibs internally. We got a challenge of the weekly high on today's close. And if there is something that I think is set up for a gap, it is metals and miners. That this is the classic setup within a 3 of 3 of 3. Now, again, I just hesitate to open up. I probably should have opened up a starter position here, but I'm holding some other things within the sector that I'm still willing to let that ride over the weekend. If there is a gap up candidate, I see it here. Above 169, we're back into a longer term bull channel, and I think that's what could trigger a move, certainly back by the end of the month to challenge those June highs. What does it look like on GDX? Well, GDX is starting to make its way up above its EMAs, and today we got our first bullish cross. So we got a bullish cross of the 8 above the 21. That has not happened since we moved right up here in February, and that's what threw it all the way up into this year's swing high. That was at 42. Imagine that this could go up 50% if it retraces all the way back to that high, and it's within account to do it. So I have GDX on high watch. I wanted to see a little more enthusiastic recovery of this lower bear channel, but again, I think it is set for a potential gap. It moves up, moves back to retest somewhere in here, the weekly high. It is a long within the 3 of 3. And this is one we've played really well. We caught a nice move here. We took profits. We added. We took almost all of our profits here when it hit weekly resistance around 27.40. And we got stopped out with just a few set of runners. So we had 100% plays in this sector this week. And I'm always looking for for something that's setting up well. I still love the setup here. So one name that I am still holding long is First Majestic AG. It's got an inside day today against Thursday's really red day. I think still set up within that 3 of 3. And here we are again. Do we have bull flag or bear flag on the move up off the opening low? I say give this a chance. 3 of 3 of 3. That's where I want to take my Elliott wave positions with a little bit of size for this count. Okay, that's everything that I want to show you, at least right here in commodities. And I didn't have this immediately open, but I do want to just go ahead and briefly load this up for you to finish up this weekend, that we should continue to be looking at Bitcoin. And so we're looking at that here on the daily. And what we're simply wanting to see is, are we seeing movement above support? Are we seeing basing and moving up? And this is the type of upsloping daily EMA movement above them all that you want to see. So until that reverses, certainly until it reverses below the 21 day at about 23.2, and then you really can't get excited on the bear side till it loses the monthly low on August 4th. This is a pattern just like SPX, just like ARKK, just like some individual names I showed you, like Block, that this is within a 3 of 3 move. And I think right here, there's no reason for you to be overly bearish. We've got 1, 2, 3 attempts over the last month to break out at 25,000. And if it does it, I think it could hit 30,000 in a hurry. So let's see what happens in the risk on crypto space over the weekend and into next week. It was a great closing week for the bulls. As you can see, the counts favor continuation. There's a lot of other technical evidence, and we continue to play this tactically. We're not taking outsized overnight risk. We're certainly not guessing short. That didn't work out at the end of this week very well, Thursday, Friday especially, and our bias continues to be long until we're told otherwise. So for continuous updates throughout the week, for intraday chart updates, for trade ideas, a wonderful community, come join a subscribing member. It is just cheap, $35 a month, all it takes to become a premium member at PPT, and we just keep marching on. Wish you all a wonderful weekend. Looking forward to another week of trading here in this hot August.